Yeah, well, thank you, Wilfred. It's good to be on the call with you today. Yeah, I mean, the U.S. is having a bit of a phenomenon that's not really being replicated in the rest of the world, but our U.S. business, which was strong going into the pandemic, saw a big channel shift over the last few months where sales to bars and restaurants went to zero, or close to zero, and that's about 20% of our sales in the U.S. But that was largely offset by this massive jump in the off-premises. This at-home drinking occasion has really spiked up, and it's been a good thing. I mean, it has essentially made our U.S. business come in just with a little bit of growth, which otherwise would have been down massively given the 20% drop in the on-premise. You don't necessarily see that same trend around the rest of the world. I'm sorry.
Oh, sorry. Didn't mean to cut you off, Lawson. Was just wondering how much of the business is actually those restaurants and bars and away from home on-premise business. What percentage of it is the overall revenue?
About 20% is bars and restaurants. And that's true in the United States and approximately true in the rest of the world, too.
So is it coming back now that states are reopening?
Yeah, the on-premise is slowly coming back. I mean, it's still down somewhere in the neighborhood of 80%. And that'll be one of the things to watch over the next few months as to what happens to this off-premise boom that we have, as the bars and restaurants come back online again. But I still think we feel pretty good about our business and the resilience of it through what have been pretty tough times.
Go on and expand for us a bit about what you're seeing in Europe. Is there a different economic outlook there, or is it just a sort of structural tastes difference?
I think it's a little more structural. Europe, and for that matter, really, the international markets as a whole, they fell off quite sharply in both March and April for us. Our fiscal year end is April 30. And we're not seeing that off-premise boom that you are getting in the U.S. to offset a lot of these restaurant sales. So Europe is a little bit more subdued. A number of markets there that are very on-premise driven, say in Italy or Spain, Greece. I mean, they're very much restaurant, the restaurants would be 80% of the sales in some of those places. And so they're down, quite a lot. And then you've got the emerging markets around the world that are spotty. Our Asian business is coming back and is relatively healthy these days. But South America, Mexico, which is our largest market, or largest of the emerging markets, is struggling quite a bit, as is Africa. So these countries or these continents that don't have a social net underneath them, like the government stimulus checks that you're seeing in the U.S. and in parts of Europe, those countries are down, and we have not seen much of a comeback yet at all.
Wondering what you're seeing, Lawson, in terms of which brands are working and which ones aren't, and how much of it is just a phenomenon of people drinking at home now, and how much is sort of a longer-term structural trend of millennials and Gen X just drinking differently than their parents?
Yeah. So, I mean, with the brands that are sort of hot in today's market, I guess, are really what we would call the tried and true brands. And that's, that has happened in the past in other crises over the years where consumers often revert back to those trusted brands that they know. And Jack Daniel's certainly fits that bill. I think there's also an issue in terms of inventory management, both in the restaurants and the bars, where if you're a restaurant and you're strapped right now and you're slowly opening back up again, you're going to make sure that you've got the brands that turn fastest. And Jack Daniel's would certainly fit into that, as would Woodford and a lot of other brands that we have. If you're a brand that's very small and just trying to learn your way through the system and grow your consumer availability, it's a lot tougher. And so that would cover a lot of the craft brands that are out there and things like that, where, the bars just aren't going to want to invest in those right now as they just don't turn as fast. As far as the longer term trend that you asked about, with millennials, we've been hearing, or you've read a lot in the media that, consumers or millennials are trying to be healthier. You've seen the spike with like White Claw and some other brands like that. But and it's true by age group, the spirits brands the spirits industry is still doing really well in the United States in particular. And so we just haven't seen it come through the data.